Hey, what is going on, my friends, and welcome back to another video on the channel. On today's video, we are going over my current strategy to absolutely maximize gains as much as possible, whether we go into a parabolic bull run or to maximize gains as much as possible. If this thing does dip down into a bear market, I think there's money to be made whether we go up or down. Of course, more if we go up, but even going down, we can figure things out there too. And so with that being said, I'm going to give you all my full-blown in-depth strategy with examples going forward on how I plan on maximizing gains again through this crypto run that we are in right now. So of course, if you are excited, you can let me know by smashing that like button and subscribing to the channel if you are new. And with that being said, let's go ahead and let's get into the video. So first and foremost, this entire strategy is going to start with short-term trades. Now, short-term trades are going to be trades, little scalps that we do on the 1 and 5 minute time frames for the most part. They're very fast, they're very effective, and we can pick them up over time to really see a lot of accumulation. Now, short-term trades can be done whether we're in a bull run or we're in a bear market, right? We see these little relief rallies. We see these swings all the time when we're seeing these bear markets. And so we can capitalize on that as well. So what the whole game plan is with short-term trades is this is going to be the least amount of money that I'm going to be putting into each buy that I make. Now, what I mean by that is if I have, say, $20,000 available to invest into crypto, I might take $2,000 and allocate that over to doing short-term trades. The goal here is to use the profits generated from my short-term trades in order to fuel my long-term investments. So if I want to invest $15,000 into, say, Bitcoin, for example, I might take $3,000, use that to short-term trade up to $4,000, and use that extra $1,000 to start to put it into my long-term trade. So over time, I'm helping that compounding effect with the compounding of my short-term trades. Now, I'm going to give you an example of a short-term trade that we did just this morning over in the Patreon. If I pull up the Discord, we went ahead and did a short-term trade alert on Bitcoin. My entry price was $41,300. Again, very, very small cash position entry. A stop loss was set at $40,000, further corrected to $40,850. Reason for purchase was, again, an extreme fall into oversold territory on the hourly RSI, followed by a rebound from overextension on the Bollinger Bands to envelope re-entry, which I'll explain in a second. I was looking for a quick 3% gain up to 42,600, with the level of risk at the time being medium to high, considering we had just seen that big fall. Now, of course, I did continue to update them on that, but what ended up happening here was this green line was going to be our buy. Let's go out to the 5-minute charts quickly. So our green line here was going to be our buy. Now, the reason in which we bought right here was going to be the break of structure. So what we've seen recently with these big falls is that we will see a fall and these little jolts back up, but eventually once we see kind of like this bottoming out pattern form, we will see some type of structure, some type of falling wedge or consolidational event such as this, in which we will see that breakout to the upside followed by a pretty big extension. So my whole game plan is I was looking for this structure formation. I was waiting the entire time during this fall to find that structure formation. Once we found it, we broke through it, we cleared it, that was going to be my entry right there. Now, of course, one thing that I did pay attention to on how I wanted to get out, because I got out at 42,600, as you can see, that was exactly where it went up to. The reason in which we did pick this one was going to be if we go out to the 4-hour charts, just for a quick example, and we turn on our Bollinger Bands, we can see that a very common occurrence within the last couple falls recently has been, we will see on the 4-hour charts again, a fall, an extension outside of the 4-hour Bollinger Band envelope. If we get one green move, one big green candle back into that Bollinger Band envelope, I noticed that we would go up to retest the nearest Fibonacci retracement level. Meaning if we came off this high down to where that low was, we would go back up, and once we cleared it, so this green candle, the nearest one was this 0.786 to 618 Fibonacci retracement level. So I knew that, boom, we were going to be aiming for that next Fibonacci level. For example, we can look at another one because, I mean, it's very common. So we could see here, what happens is that the price, it came down. We could see this nice little fall happen right here. So we would go swing high, boom, to swing low. And we could see that once we got this green candle back into it, boom, we saw that extension back up into our nearest Fibonacci retracement level. In this one example, again, the 0.618 to the 0.786. So when we saw the price fall out of the 4-hour Bollinger Band envelope, I was looking for that big green candle, and that's exactly what we started to see. We got that green candle, of course, starting. You know, we started to fall out of it. We recovered a bit and got this green candle in here. Okay. Now, as you can see, the price did come back down and start to fall and fall and fall, but we were already ready to go on this thing. So if we go down to the 5-minute charts, for example, here we go. we can see that the price then saw that breakout. So remember, we started pretty nice, we saw a little fall, and right here I was already game planning, like, all right, let's look for that reversal. We saw the clearing of that trend, this downward trend line right here. Boom. We cleared this extremely short-term 786. If we go boom, swing high, down to swing low. Right here. Let's go here. And we have to move that up just a bit. There we go. It moved whenever we moved the chart. We were looking for that clearing. We saw that clearing and we were ready to get in as soon as I could get the buy-in. It had already got up to this point, and I was looking to see that upward move. We of course did see a little bit of pullback. We saw the price come back down to retest this downward trend line, but it was already too far in motion. We came back up to perfectly execute to our nearest Fibonacci level off that swing high, swing low event, which was the 0.382 to the 0.5. Typically what I would do is I look for the price to hit that center line in between the 382 to the 0.5, and I set my stop loss a little, or my limit sell a little bit lower than that, just so if it goes up and goes through it, it'll sell, and if it misses it, if it comes back down, I'm going to catch it one way or another. I'm either catching up or catching going down. And so I was able to get that sell off with a nice little scalp trade, again from entry to exit of about 3.14%. Now I will give you guys the exact number. I'm not gonna lie, we did go in on this trade with $5,000. We picked up a 3% trade, a little bit over 3%, but KuCoin of course does have that like a 0.10% trade fee, so about 3%. So we picked up about $150 off that trade, in which I am now going to allocate over to my long-term position. So now another thing to consider with these short-term trades is that they are also very useful in the terms of a bear market because they help mitigate as much risk as possible. The reason I say that is because if, for example, you have $10,000 in Bitcoin that then goes down to $5,000. Well, if you're able to do maybe that trade, we made $150 and say you can get 10 of those, okay? Well, then you've just made $1,500 while the prices of everything else is falling. So while everybody else's portfolios are gradually declining, yours is still falling as well, of course, but you're able to kind of knock it back up just a little bit here and there. So say you lose $5,000 over the course of 2 months, but make $1,500 back through short-term trading. You then cut that loss from $5,000 up to $3,500. So whenever things reverse, you are going to even see further growth because you didn't take as much of a loss. So not only are short-term trades important again for helping the compounding of your long-term growth, but also mitigating as much risk as possible by using small amounts of money to accumulate over time to help build against those losses. So next up, it is going to be our midterm trades. Now our midterm trades are going to be very similar to our short-term trades, but they're just going to take a little bit longer and we're going to do a little bit more cash. The reason we can do a little bit more cash into our midterm trades is because we look for patterns that are being repeated over the course of weeks and days. That's going to be important because these are the patterns that typically play out for a little bit longer. If we're doing short-term trades, those things move quick, they move fast, and our stop losses are set so tight that you can't be 100% with them. Now with midterm trades, you can have a much more efficiency rate because they are much more predictable and readable over the course of a few weeks rather than just a few minutes. Now a good example of one of these trades is going to be what I'm looking for with Solana right now actually. So with Solana, for example, one thing that I've noticed is a common pattern. That pattern is going to be if we go from the low that we set on the bottom of our falling wedge to the high that we set on that falling wedge. We typically will come down, and if we roll back down to a 1.272 fib extension and then use that as support to retest the top of the channel. Now one thing you'll notice is that if we go from all of these moves, let's do another one. Let's go from this swing low to swing high. We come back down, establish a support, and try to come back to retest some of these key levels of Fibonacci resistance. If we go back out to, let's go this little move right here, right? Even this move. We go swing low up to swing high and we drag it. Look where that support establishment is. We come back down, establishment of support, attempt to go back up to test the top of that channel. So my game plan right now is that if we do see Solana's price start to roll, which things are looking good, but say if it starts to roll, I'm drawing this Fibonacci level from swing low to swing high. I'm looking to see the price come back down to a 1.272, somewhere down here, around $105 to $100, and establish some support there. We establish some support and start to see the turnaround. I will start a midterm trade here over the course of a few days, possibly up to 10 days maybe, in order to attempt to see it recapture some of those fib levels and retry and retest the top of that Fibonacci resistance area here and this key resistance from our downtrend. That's an example of a midterm trade. We're going off of more long-term patterns that have been repeating over the course of a few weeks and using those patterns to help try, of course, to predict where the next big price movement could be. Now, since these are going to be a little bit more money involved, of course, we are going to be doing these a little bit less. We want to be 100% confident. We have to do a little bit more studying and make sure that when we're entering in on these, we're not killing our total cash positions by doing a bunch of midterm trades that are being losses. If we're doing short-term trades, you can take a few more losses because it's smaller percentages of money. But if we're doing more of these trades, these are going to be the ones that we're 80 to 90% confident in. Of course, we will set stop losses. So for example, say if I was to buy, some Solana right here, we come back down and we start to work our way back up. I'm setting a stop loss right under this channel. So if we do lose this pattern, if the pattern breaks, we get out. And typically you can mitigate loss, but still that can be a pretty large loss in comparison to your total cash position. So that's going to be our midterm trades. A little bit bigger trades, a little bit more, safe in a way, because we're only going to capitalize on ones that we truly honestly believe in. And then we're using, again, the profits from that and funneling it over to our long-term position. Because consider this, say for if this trade I put $1,000 in, if this comes down and touches this key level, $1,000, it then goes up to touch our top channel. It's a 25% gain there. I'm looking for those 15 to 25% gains on those midterm swings. So right there, $1,000, that's $250. If I can get 4 of those a month, for example, I can funnel that $1,000 and put that into my long-term position, and now I have an extra 1,000. You get what I'm saying? So instead of just sitting on all this money waiting for a long-term hold increase, I can use some of that money to be trading to try to compound my compounds, if that makes sense. Now, the next thing that we're going to do is focus on our long-term half trades. Now, we did speak about these. Now, what that's going to be is we are going to be looking for those long-term support levels that have cyclical importance. What I mean by cyclical importance is that through the cycles of bull markets, they have proved to be important. Now, one key example of this can be the weekly 20 simple moving average. We know historically that this is a key level of support. And if I'm under the belief that we are still in an uptrend or a bull market, as I do right now, I could be looking to increase and put a good bit of money. Maybe instead of, just $1,000 trade or something like that, I could be putting, $3,000 or $4,000 allocated straight into these trades. So for example, if my long-term hold position was sitting at, maybe if I had, let's do numbers. Say if I have $10,000. I put $1,000 allocated to short-term trades. I put $2,000 allocated to long-term trades. That leaves me $7,000. For this example, I would say I would do about $3,000 that I would be putting in to some of these different long-term support levels. So I still got my $4,000, which is saved for next, but I'm using a much bigger chunk of that total cash allocation that I've saved up for that month in order to fuel this long-term position increase. Now, another key example for, what we could be looking for, one that I've honestly taken use of, that I've put money into, was going to be this key level down here. This was my last major Bitcoin purchase. Now, what we can see is that we knew this. It was a fact that in no bull run have we seen the price come from this previous all-time high down to its bull market, the bear market low. We did not see any weekly closes below its 1.618 Fibonacci extension. We've never seen it. So the whole idea here was that I believed we were still in a bull market, or that we would at minimum see a dead cat bounce to the upside. So I was using this as a buying opportunity for not only Bitcoin, but all major cryptos. Every time that we came down to touch it, whatever cash I had available, I was putting about 40% of that cash into that because that's how confident I was. Now remember, every month I refuel how much I am looking to put in that month. So it's not all of my cash in my savings account, but whatever I'm willing to put into crypto, it was about 40% going into these half trades. So now, once we would start to see those bounces, that would be, of course, a fantastic dollar cost average entry right there. Now, the other good point about this, the great thing about it, especially with Fibonacci levels or hard levels, so a hard level is a non-moving level, like a simple moving average moves. A hard level is just a price. The good thing about this is that typically what happens if we were to lose a level like this one is that the price will come down to find support and retest that previous level of support as resistance. So if I'm wrong and that level fails, there's a good chance we may come back up, retest it as resistance, and I can use that as my exit. Or if I really just have that long-term faith, I can use this as a dollar cost average opportunity. So even if the price does keep going down, I can find these fantastic levels of support, anticipating that one of them will hold and then send us back into our next bull market. So last but not least, we are going to be putting the majority of the money into our bull market confirmation trades. Now, what I mean by that is there's a few things that can happen in crypto for me to fully 100% believe that we are in a bull market. The biggest one being right now is going to be this two-step process. As you guys know, we set this high up here about 60 on this chart is $63,000 to $65,000. We've now set this trend line off of this bounce that we saw. What I want to see right now is that if we clear this trend line, that's step number 1 of 2, that we are going into probably a big parabolic leg up to $75,000 to $100,000. So what I would do right now is take that last, say, 4,000 of that 10,000, again, 1,000 to short terms, 2,000 to mid terms, and then we put 3,000 simply into our more long-term half trades. We're going to then take that very last amount of money of $4,000 and put that into these confirmations. This is all I got left. Like, I'm serious. Like, I'm at that point that I'm so confident in the crypto that if I have available cash and I fully believe that we get confirmation it's going into a bull market, I am willing to put all of my cash. I will inject every dollar that I have allocated for that month into that trade in a two-step process. 50% of that extra $4,000 would go in on the breakout of that trend. Do understand, though, that there is a massive risk of us faking out to the upside, coming back down. So personally, what I would do in this example is look to set a stop loss under that trend line. So if we see a fake out to the upside and a breakout back in, I can get out of that before taking a big loss. The second thing I would be doing in terms of confirmation is looking for that big swing high to swing low clearing of the 786 with support establishment. So remember, we put 50% in here, boom. The next 50% comes in once we clear that 786. The clearing of $57,000, in my opinion, sends us to $75,000. I have no doubt in my mind about it at all. I think if we clear that 786, we come back up, clear that all-time high to push to a 1.272 extension up at $75,000. And at that point is when I'm putting the rest of my cash in. But the thing about it is, think about this. It wouldn't just be $4,000 that I'm putting in. I'm also putting in whatever's remaining from our short-term trades, because at that point I'm serious, all the cash then goes into it, as well as whatever money is being built up from this support establishment on this cyclical support level, from our short-term trades, and from our mid-term trades, because all of those will be in the green. And from there, that $10,000 that I had originally to inject into the market that I could have just randomly threw in, I may be going into this big bull market already at $14,000 simply because I was using my cash as effectively as I could while it was, while I was on the sidelines a bit, waiting for that continuation of that bull market. Now, this even works if it goes into a bear market. If we go into a bear market, every single month, I'm looking for these cyclical support levels. I'm catching short-term trades right here, right? So say if the price is doing something like this, we're coming down and we're having these little bounces, boom, these little bounces, boom, little bounces. I'm short-term trading on these bounces. I'm not going to be 100%, but I'm going to be as close as possible to mitigate my losses as much as possible as it comes down, to help build up these positions and lower my dollar cost average as we reach these key levels of cyclical support, so that when the time comes, as it will come, that we will get up and start to clear that all-time high into our next bull market, I have effectively dollar cost averaged my way down, mitigated loss as much as possible, and lowered my average cost as much as I possibly could in a self-healthy and efficient way. So that's my strategy. That's what I do. That's my game plan. It might be a little weird, but it's worked for me. And even in the stock market, it's worked for me. And so I'm going to continue to bring that over into crypto. So of course, if you guys do find this useful or entertaining in any type of way, you could of course let me know by smashing that like button. If you guys do want to get in on these short-term trades that we do, of course, my goal is 20% every single month in gains from our short-term trades, where we got that 3% gain this morning. So I would just need about 5 or 6 more of those. If you do want to take a part of those, just go down to the link in the description. Go check out the Patreon. You can get access to my trades, my portfolios, early video access, exclusive content, educational research, and more. So definitely do go check that out. And of course, I do appreciate those of you who did tune in. With that being said, though, I will see you all very soon in the next video. I hope you all have a fantastic weekend. Peace.